Hello, I'm Miyun Wu from the Department of American Cuisine. Today is April 30th and we'll begin the American Cuisine News. Today as well, I'm Miyun Wu, here to deliver the latest updates on the United States stock market without any changes. Today is the last day of April. We usually call April the month that connects spring, but originally April was the beginning of the new year, when the weather changed and various living things started to come alive. So why do we call April the month that connects spring, even though it was originally the start of the year? That's a very interesting point. But when we actually look at nature, we see that the buds of the year come up more painfully than the harsh winter. I don't know the exact reason, but during the winter, everyone tends to be a bit depressed, staying indoors, feeling gloomy, and not really looking outside or wanting to do much. Then, when spring comes, things start to change. Many people are out on the streets, and when you look around, the world seems happy. But for those who are still struggling with their own difficulties, they feel an even greater sense of isolation. Maybe that's why April feels even colder and harder for some people. That's just my personal thought. For stock investors, April was particularly cruel. The world is already tough, but the stock market crashed and it became even more psychologically challenging. The United States stock market has been rising for 6 days straight, suggesting that April's harsh conditions are easing. I want to share this positive trend with you. Now, April's over and May has come, and in May the stock market tends to get a bit more active. So as this difficult period continues, it's not easy for us stock investors. That's how it is. The more difficult it gets, the more you need to keep a positive mindset and take care of yourself. Since the tough April is over, I hope you can relax a little at the end. Now let's get started with today's Bing 2 News for April 30th. Today, before we get into the main broadcast, there are two important announcements to cover, so I'll go over this part first before moving on. I'll upload 2 announcement posts 2 hours before starting the live show. The first announcement is that the shipping schedule for the Shinting Alpha is now underway. Shinting Alpha has not participated in any promotions recently. Previously, they often held discount events, and the discount rates were high. Just a while ago, Seeking Alpha held a rare promotion. Please make sure to check the link below. This way, you can get information like this through the YouTube community posts that I share with many people. If you click here and join, you'll receive this kind of information. The Seeking Alpha annual sale event is currently ongoing and will run until Saturday, May 11th. The promotion offers a further discounted price. For first-time users, the annual membership price is reduced from $299 to $269, a $30 discount. The second benefit is that you can try it free for 7 days. So you can sign up now and try it out for a week. You don't have to pay it first. If you don't like it, you can cancel before the 7 days are up and you won't be charged. And the third benefit is very special. Next month, we will release a list of recommended books for free. So, if you sign up for the Alpha Premium membership this time, next month you'll be able to experience a meeting where you can see which stocks are selected as the best stocks by the system in real time, along with many others. To join, just click the promotion link below and sign up. For reference, existing Seeking Alpha members will need to use a new email address and a new credit card to sign up in order to receive the benefits of this promotion. By the way, do any of you have questions about the Seeking Alpha promotion? Here is my email address, so if you send your questions to this email, I'll do my best to answer as many of them as possible for everyone. There's one more announcement today. This time it's about a special promotion related to choice stocks. As I explained before the lecture, I announced this event only in the morning through the Seeking Alpha app. So after I received this information from the Seeking Alpha app, I immediately contacted Mr. Kim In-jung, the representative of Choice Stocks, as soon as I thought of it. So if possible, I asked him if he could also run a similar promotion for choice stocks during this period. And he responded very quickly and positively to my request this time. So if you click on the link for the Choice Stocks discount promotion here, you can go directly to this page. Choice Stocks has a very high discount rate. If you choose the annual plan, you can get a discount rate of up to 50% compared to the regular 40% discount. The period is the same. It runs until Sunday, May 11th. For some special cases, such as the wedding album, the discount only lasts for 1 year, and after that it returns to the regular price. Choice Duck is not like that. This time, by using the promotion, the discounted price and even the annual membership price are both under 200,000 won. If you join this time, you can enjoy the benefits of an annual membership for just 200,000 won until you cancel your membership. This is how the policy is structured. To join, sign up via the promo link provided. Please review the terms and conditions. Last Saturday on the broadcast, Mr. Kim In-jung introduced it in a relaxed way, and since then, Choice Doc has launched an app. So whether you use an Android phone, iOS, Apple, or iPhone, now you can download the app on all of them. So I'd like to give you a brief explanation on how to install the Choice Doc notification service. And if you need additional help regarding Choice Stock, there is a customer center link here on Choice Stock. You can use this link to move to a one-on-one chat room. With Choice Stock, you can have direct conversations with representatives like Kim In-jung, as well as with friendly and kind Choice Stock support staff, so you can get the help you need. You can get various help. Now, I will organize the recent trends in the United States stock market. First, let's take a look at the S&P 500 chart. Yesterday, most of the stocks were marked in green, indicating a positive trend, while the red areas were limited. Overall, it was a good day with many stocks showing gains. But still, there was one unusual situation that stood out. Overall, both the red and green colors were a bit muted. Overall, there weren't many stocks that stood out as particularly strong or weak, as you can see here. If you look at the actual performance of the 11 sectors in the S&P 500, except for one sector, energy, the remaining 10 sectors all went up. The gains were in financial services except for finance, and none of them reached 1%. So in a way, it wasn't that great, but it wasn't that bad either. If you look at it this way, you might think the United States stock market was in a rather weak state. Let me explain again why the United States stock market was in a weak state. Today and tomorrow, there are important earnings announcements scheduled. For example, today, Microsoft and Meta will announce their earnings, and on Thursday, Apple, Amazon, and MasterCard are expected to report their results. And today, the most important economic indicators, the March employment, PC, and price indicators will be announced. Investors can gauge market flexibility by examining these key indicators. That's the proper perspective. When the United States stock market rises like this for several days in a row, there are often big changes in the market. Now it's up to 39.16. Yesterday it was 34.59. Among the 500 major industries in the market, 40% of sectors have recovered to a short-term high, indicating strengthening momentum. This is the perspective to take. If you look at the long-term trend, the number of stocks trading above the 200-day moving average is less than 35%. Therefore, the long-term trend needs to recover a bit more, but we can be more confident that our bullish rebound is progressing successfully. Next, I will show you the distribution of supply and demand. VIX has been falling until the 24th, and it has been falling a lot during this period. So, the market is quickly returning to a stable state. You can see it like this. The short-selling restriction ratio has also gone up to 39. The day before, it was 37. Until recently, the market sentiment was not ready to shift to a bullish trend, but now you can clearly see that the market sentiment is rapidly improving. The maximum score provided by the choice stock is currently at 36. Recently, even the unused stocks have performed quite well. There were a lot of stocks that went up, and Strategy G rose the most with a 33% increase. 2.15% Uber plus, 1.39% Palantir plus, 1.25%, and Bituga plus 1.15%. Meta plus increased 0.85%, Taiwan Semiconductor Manufacturing Company plus 0.66%, and Bitcoin 0.61%, totaling 94,880 times. Credit Technology Plus rose by 0.39%, Nvidia plus by 0.27%, and Talon Energy plus by 0.24%. The Nasdaq index closed lower, but it was only a slight drop. Amazon minus 0.17, Visa minus 0.2, Alphabet minus 0.28, NextEra minus 0.3, Zero, Broadcom minus 0.68, Celestica minus 0.81. Lastly, Nvidia has been showing a trend of rising more than 20% per week, but recently it's slowed down to just over 1%. Today, I also tried to deliver the news as quickly as possible on the broadcast. In cases like yesterday, there was a lot of conflicting news, but there was also some positive news, and we were able to see both sides. What was the first positive news? The first positive news is that President Trump has signed an executive order to strengthen regulations on autonomous vehicles, and this news was delivered. The United States Department of Commerce states that over 85% of parts used in vehicles produced and assembled in the United States are domestically made. They will provide tariff exemptions and credits for these vehicles. And another thing, aluminum and steel tariffs will no longer be imposed repeatedly on automobile tariffs. This is also a very big benefit. And this is expected to be a great advantage for American manufacturing companies. That was the news that was delivered. Now, besides this, there was another positive piece of news, and there were also some drawbacks in the market. This time, I will try to summarize the various positive and negative factors through this article. On Tuesday, the Dow Jones Industrial Average and the S&P 500 both recorded gains for the sixth consecutive day, continuing their strong upward momentum in the stock market. This is how we can summarize it. Was Dow Jones's recent consecutive rise recorded? This is the longest streak since July 17th, with the index rising for 6 consecutive days in this short period, which is remarkable. The S&P 500 also rose for 6 consecutive days, which is the longest streak since the 7-day rally that ended on November 26th. The 2-year government bond yield fell to 3.66%, and the 10-year government bond yield also dropped to 4.17%. Now, when interest rates fall like this, tech stocks and various stocks tend to benefit. I've explained this part several times before. Recently, the sharp rise in the stock market has continued. And then, thanks to Jerome Powell's remarks at the Federal Reserve, the rally became even stronger. Earlier, I explained the details of the automatic car, and there was also some positive news. Secretary Rudnick said this: "I have exempted the United States from tariffs. However, we await the official announcement and confirmation from the United States, expecting the approval to come soon. Therefore, negotiations are currently underway with several countries. In other words, the results have started to come out. Countries are negotiating with us for the first time, thanks to our efforts." Nevertheless, the market's interest is not in the trade negotiations themselves, but rather in the actual impact on industries and economic indicators that will follow. As I mentioned earlier, today and tomorrow, several important pieces of news are expected to be announced. This week, major technology companies are expected to announce their actual results, and today the first quarter gross domestic product and personal consumption expenditure price index are also scheduled to be released. And there's one more thing on Friday. The non-farm payrolls report, also known as the employment report, is scheduled for release. This is because through the employment report, we can clearly see the current state of the labor market amid concerns about a recession and the possibility of a soft landing. Right now in the market, there are a lot of concerns about a recession. That's why the importance of the employment report is higher than ever. If the employment report is strong, the market could easily shake off concerns, so expectations are possible. Another variable has emerged. In contrast, the April United States Consumer Sentiment Index was much lower than expected, as uncertainty about the future remained high. According to the Conference Board's announcement, the Consumer Confidence Index dropped from a revised 93.9 in March to 86, marking a decline for the 5th consecutive month. PatSet's forecast for experts was 88. It fell to 86, 2 points lower than expected. The outlook is poor. If you look at the more structural numbers, the leading index, which shows the outlook for the short-term economy, recorded 54.4, down 12.5 points. This is the lowest figure since October 2011. So it's the worst situation in 15 years, as you can see. In the last 6 months, the consumer price index has risen to 32.1% as expected. This is also the worst level since April 2009. 2009 was the time when the global financial crisis occurred. So the current situation is not that good, as you can see. Afterwards, the percentage of consumers who feel the economy could improve over the next 12 months rose to 72%, reaching its highest level since 2023. One notable public aspect is that even in 2023, the proportion of consumers who felt the possibility of an economic recession remained high. However, despite that, no economic recession has actually occurred in either 2023 or 2024. Over the past 12 months, expected inflation has risen up to 7%. There is a record of the highest figure since November 2022. I tried to closely imitate Han Madiro from the United States. Recently in the United States stock market, despite gains in Hojie and Akjay, the broader uptrend did not persist. This part is very positive. Hyosang's remarks that there are countries that are isolated and President Trump's executive order to ease regulations on self-driving cars, as well as the latest consumer confidence index announced by the Conference Board, all indicate positive news. If you look at it this way, it makes sense. In reality, many economists use the Consumer Confidence Index or the University of Michigan's Consumer Sentiment Index as leading indicators to predict the direction of consumption. So, if these kinds of indices don't turn out well, and if consumers' willingness to spend drops, then ultimately gross domestic product will fall and the likelihood of a recession increases. Despite that, the United States stock market recorded an upward trend. Among the reasons, one is that personally, I think the main reason is that the market's concerns about the soft data reflecting recent employment and survey results have eased a bit. But that's because there is a lot of data that is politically influenced. Now, what's important is the hard data that will be released today. The Personal Consumption Expenditure Index, personal consumption expenditure, to be announced today, will reveal the actual consumption situation of Americans. That's the best way to assess it. As many of you already know, consumption accounts for about 70% of the United States' gross domestic product. So, if consumers are active, gross domestic product can grow. And if consumption slows down, that's not good. That's how you should see it. So if Americans' consumption is strong, the United States stock market can also stay strong. But if consumption weakens, the future of the stock market is uncertain. The most important indicator is PC. Looking at it this way will help you understand. According to market consensus, the March PC price index is expected to be 0.0% compared to the previous month. So there is expected to be no change. This is the current forecast. The annual rate of change reflecting this is expected to remain at 2.3%. Now, more importantly, the main reason besides food and energy is the core PC. The core PC rose 0.1% from the previous month and 2.6% year over year, unchanged from before. So let's see what kind of trend the PC that's being announced today will show. The United States stock market's continued upward trend will depend on these expectations, or a decision may be made to pause. Recently, among the factors leading the rise in the United States stock market, one of them is definitely Tesla. If you take a closer look at the performance of recent stocks, if you look at last week's performance, Palantir rose by 23.5%, which was the best, followed by Tesla with 22.72% and NVIDIA with 20.23% leading the market. This is how it looks. In fact, Tesla surged by 28% in just 6 days. Now let's talk about why Tesla's stock price is rising like this and whether this upward trend can continue. I'll summarize it for you through this article. Tesla's stock continued its upward trend for 6 consecutive trading days, showing strong gains even on Tuesday. The stock price was mostly in negative territory during the session, but eventually closed up 2.2% at $292.03. This part also showed a strong upward trend. The stock price fell but rebounded by the end of the session, indicating strong sales growth. That's how you should view it. According to Tesla, the stock price surged by 28% in just 6 days. Volatility has relatively decreased a lot. On Monday, it rose by 0.3%, and historically, the volatility dropped from 132.8% on April 11th to 69.7% now. Tuesday and today, Wednesday, there is still one thing that is drawing attention in the market. Let me explain in advance. President Trump announced changes to the automobile tariff policy. For automobiles and parts, there is a 25% tariff on Canadian and Mexican products, a 25% tariff on European products, and a 10% tariff on most other countries' products. These are the different tariffs announced by President Trump. It was mentioned that these tariffs would not be applied repeatedly. And for the 25% tariff applied to imported automobiles and parts, it only covers about 3 to 7.5% of the total car price. As a result, auto parts firms are poised to directly profit. This deduction rate is factored into the car price estimates. They were given a grace period of 3 years, so you can see it this way. The 25% tariff for finished cars remains unchanged. However, Tesla does not import complete vehicles, but tariffs apply to imported parts. But they can receive a 3.75% tax exemption. Therefore, for Tesla, depending on the proportion of domestic parts used, up to 2/3 of this tariff can be reduced or even fully exempted. The recently announced tariff policy changes are likely to greatly benefit Tesla, which can be interpreted positively. These tariff policy changes will have a broad impact on the entire automobile industry, and there is a possibility that Tesla's stock price momentum could be boosted as well. On the 6th, the stock price jumped 28% in one day, which was surprising as there were no major technical changes. With unexpected good news, the stock may continue rising, keeping expectations high. Until Wednesday, Tesla's stock price rose for 6 consecutive days, and after the actual announcement of the first quarter results, it increased by more than 20%. That's really amazing. The earnings results announced a week ago were actually the worst ever, but the problem is that it's the worst ever. It could get even worse in the future, so why do we call it the worst? It's because there's an expectation that things could get better from here. That's why the stock price already reflected the bad news. Now there's nothing left to drag it down further. It makes sense from this perspective. Tesla's Q1 sales were 399,000 units, a 65% decrease from last year's same period, significantly below Wall Street's 490,000 unit expectation. Still, the stock price rose for several reasons. The stock market primarily reacts to future expectations, which is the crucial aspect to focus on. Investors are expecting that Elon Musk, the chief executive officer with the highest management skills, will spend more time on Tesla instead of focusing on government efficiency issues. They are also focusing on the upcoming 2025 model launch, which is anticipated to increase sales. Looking ahead, industry expectations are rising. That's how you should view it. And I'm also looking forward to Tesla's self-driving technology performance. Tesla plans to launch its artificial intelligence-powered autonomous taxi service, Tesla Robotaxi, in Texas and Austin, possibly in June. They also aim to introduce a humanoid artificial intelligence robot in the future. Due to the numerous ambitious plans in the works, if implemented, the company's stock price could see a significant boost, leading to high expectations. Morgan Stanley's Adam Jonas analyst predicted in a Monday report that by 2050, tens of billions of humanoid robots will be operating and that the market size will double every 5 years. This is the forecast he made. He said that the humanoid robot market could double in size every 5 years and that it could even surpass the current size of the automobile market, which is already enormous. This is an extraordinary forecast. Adam Jonas said that China will be at the forefront of humanoid robots, but Tesla will also play a big role. That's why Adam Jonas set Tesla's target price at $410. Tesla's physical artificial intelligence, autonomous driving, and humanoid robots will bring revolutionary growth and tremendous opportunities to the traditional automobile industry. That's why Tesla's performance is at its lowest right now. This performance involves automobiles, but also encompasses physical artificial intelligence, autonomous driving, humanoid robots, and robot taxis for the future. These areas will see tremendous sales and opportunities. That's the perspective to have. Tesla's stock exhibits strong growth stock characteristics, which are reflected in the company's fundamentals. Let me explain from here. If I explain what this means, the automobile industry is a cyclical industry compared to technology stocks. Usually, unless Tesla is a tech stock, there are people who think of it as just another car company. You have to combine these two concepts, but fundamentally, it's more accurate to see it as a tech stock. However, cars are currently being bought and sold as consumer goods in this industry. So it's pursuing a cyclical business. That's the reality. Investors tend to sell stocks and secure profits when a company's performance is poor. From a monetary perspective, it's understandable. For companies like Samsung Electronics, when their performance is subpar, stock prices can drop quickly, prompting investors to sell and secure profits. With cyclical stocks, it's crucial to buy when the cycle is down and sell at its peak. Recognizing this characteristic is key. For this kind of cyclical characteristic, the Tesla stock price is currently being traded at about 135 times the expected earnings for 2025. Previously, I explained about Microsoft Technology, and Microsoft Technology is... So when the price-earnings ratio is not good, you should buy it, and when the price-earnings ratio is extremely good, you should sell it. There is this kind of saying. Despite Tesla's seemingly poor state, selling based solely on its current price-earnings ratio is not advisable. However, earnings are currently peaking, so if future earnings growth slows, the price-earnings ratio may rise. Thus, a high price-earnings ratio can sometimes signal a turning point and be interpreted inversely. Now, this is the price difference between the Yerta Magnificent 7 and the rest, which is about 25 times, and as you can see, that's a huge gap. However, despite that, in the long term, Tesla's earnings are expected to grow about threefold by 2028, according to projections. In contrast, Apple is projected to expand by around 33% during the same timeframe. As Tesla's net profit is projected to keep growing, many investors view the present situation as a prime buying opportunity. There's some good news regarding Tesla. Recently, Tesla's stock received a lot of attention on the Reddit community, r short squeeze. Here I am with you. It says right here, Tesla's stock has finally appeared on the radar, and now it's possible to interpret this as a buy signal. Buying stocks at the very bottom is impossible. Instead, wait until you're certain the trend is turning upward before buying. That's a safer approach and the best way to look at it. I've given this advice many times before. Especially with the recent announcement about self-driving cars, there's a high possibility that Tesla's upward trend will continue. That's how you should see it. The technical indicators weren't that good. Just before Tesla's earnings announcement on April 25th, its 5-day moving average crossed above the 20-day moving average, forming a golden cross. And if the upward trend continues a bit longer, the 5-day moving average could even cross above the 60-day moving average and the long-term moving average as well. The upward trend is holding strong and steady, becoming more apparent as shown in this chart. Currently looking at Tesla's momentum indicator, out of 26 indicators, only 4 are showing a buy signal, 9 are neutral, and 13 are showing a sell signal. And if you look at the weekly chart for the past 6 months, you can see that it's been very sharply on the rise. To explain why, Tesla has confirmed the 220 level 4 times in a row. When a stock hits bottom twice, the likelihood of a strong upward trend rises. In Tesla's case, it bounced off the same support level multiple times, ultimately succeeding. The stock is forming a double bottom pattern with the top of the range at 288. However, it has recently broken below that level. So, if it can maintain its price above $288 after the breakout, there's a high possibility it could continue rising up to the next level at $326. This is how you can technically anticipate the future movement. Next, the prepared article is news related to Meta, which is expected to announce its earnings results today. Meta's artificial intelligence-related news is generating significant interest, with a major announcement anticipated today. By launching an independent artificial intelligence app, Meta is trying to diversify its business and compete with ByteDance. This is breaking news. Let's take a look at it together. Meta has separated the artificial intelligence features that were previously provided in its social media apps and has now launched an independent artificial intelligence assistant app. Meta announced that users can personalize their experience, have conversations, and receive tailored responses with the new Meta artificial intelligence app, which is being released for the first time. According to Meta's spokesperson, this standalone app will be available on both iOS and Android platforms. That's what they announced. You can also access it through your desktop by visiting the website and use it there. Meta is competing with open artificial intelligence Anthropic, xAI, and Google in the consumer artificial intelligence sector. According to the company, this app is powered by the Llama 4 artificial intelligence model, and it also includes a Discover feed where users can share how they use artificial intelligence with others. And it also provides voice conversation capabilities, so you can use artificial intelligence while you're on the move or when you're multitasking. You can now interact with artificial intelligence through text, voice, images, and videos. The artificial intelligence can recognize and discuss the content in conversations. In September 2023, Meta announced that it would introduce artificial intelligence features to its apps such as WhatsApp, Messenger, and Instagram, and named this Meta Artificial Intelligence. So that's how it's been until now. You could only use Meta Artificial Intelligence by going into apps like WhatsApp, Messenger, or Instagram, but now they've developed a standalone app, as you can see here. In January, Mark Zuckerberg, the chief executive officer, said, Meta Artificial Intelligence aims to reach over 100 million users by mid-2023, as previously announced. At that time, the company revealed that the number of monthly active users of Meta Artificial Intelligence had already surpassed 70 million. Meta is expected to announce its first quarter results today, Wednesday. Before that, they said they had already previewed some positive news. Next, regarding Meta Artificial Intelligence, they said they would make it possible for users to share their own creative ideas more easily. Meta Artificial Intelligence, you mean? Because platforms like Facebook, Instagram, and WhatsApp already have a lot of users naturally connected to them. It has the potential to quickly reach and expand to hundreds of millions of active users in just a short period, even without separate signups, because it's integrated as a feature. As many of you already know, platforms like Facebook, Instagram, and WhatsApp are incredibly popular and have a huge number of users. And the number of users exceeds 3 billion. If 1/3 of verified users adopt Meta artificial intelligence, that's 1 billion people. That demonstrates the power of the numbers. I'll show you directly so you can see for yourself. The website you're looking at right now is powered directly by Meta artificial intelligence. As you can see here, there are 3 ways to create a Meta account. You can sign up for Instagram using your Facebook account or email. If you have a Facebook account, click here to easily register. As you can see, my Facebook account is already linked. Just click here and you're done. Let's continue and explore together. I wanted to show you how easy it is to sign up by actually going through the process myself. Here's the message that pops up. It says, creating a Meta account for Creator Artificial Intelligence is account. So it's creating a Meta Artificial Intelligence account right now. The welcome message has appeared. That means the sign up is complete. But for users who just use it as an Instagram page, it only took about a minute or 2 to get through. It means you can join Meta Artificial Intelligence very quickly. So it's not that the goal of reaching 1 billion users is just an empty slogan, but it's actually very achievable and we can look forward to it happening. It's a technological performance breakthrough. The new Generative Pre-Training Transformer based on Generative Pre-Training Transformer 4 still has high-level output capabilities, multimodal processing, and deep analysis skills, so it's actually ahead of its time in many ways. I'm also using several different AIs at the same time, and overall, it seems like the most impressive presentations are being made with PowerPoint. However, Meta Artificial Intelligence is being improved so that users can share their artificial intelligence, generated content directly to the Discover feed, check the content of conversations in real time, and strengthen various social features. That's why Meta has a strong advantage in the social media field. So, Meta Artificial Intelligence is also continuously strengthening features that allow users to connect with other network people and share content. That's how you should look at it. So it has become more personalized, and the functions of social networking services are also being strengthened. That's how you should see it. As a result, for most ordinary users, it is expected that Meta Artificial Intelligence will become more preferred as it focuses on connectivity with social apps that people already use in their daily lives. Is this the reason? By using Meta Artificial Intelligence, you can write text, create images, or even make videos and share them directly on Facebook or Instagram. This is the biggest competitive advantage. Whether it's analyzing complex business data or using it for research purposes, the high-performance model of PyTPT is the preferred choice. That's how you should look at it. What about Open Artificial Intelligence as PyTPT? As of March 2025, it has about 600,000 or more monthly active users. Hey, but it's 6 million people, not that number? Because globally, the number of smartphone users is estimated to be around 5.27 billion. That's what it means. So far, the market share of ChatGPT is less than about 1%. So, to put it simply, ChatGPT, which is currently at the forefront, only accounts for about 1% of the total market size. That's how you can look at it. So this news means that Meta has entered the artificial intelligence competition fundamentally in a market that is not yet saturated. I'm evaluating it personally as Hojay Kwon. The next prepared article is about information related to AlphaGo and Google. Recently, there has been more Waymo news than Google news. But if you look at it, it seems like we're at the dawn of autonomous driving, and it feels like we can look forward to what's coming next. According to the title of this article, Waymo and Toyota have formed a partnership to introduce autonomous driving technology to private vehicles. I will read this article as an artificial intelligence voice that reads article summaries. Alphabet's subsidiary Waymo and Toyota have announced a partnership to introduce autonomous driving technology to private passenger vehicles. The two companies said they will combine Waymo's autonomous driving technology with Toyota's vehicle expertise to explore ways to enhance privately owned vehicles, according to their joint statement. The two companies explained that the goal of this partnership is to develop safer and more innovative driver support and autonomous driving technologies for privately owned vehicles. Toyota is the world's largest automaker by sales volume. Waymo's co-chief executive officer, Takedra Mawakana, said that through this strategic partnership, Waymo could also consider including Toyota vehicles in its ride-hailing and autonomous fleet in the future. The partnership with Toyota is Waymo's latest autonomous vehicle partnership. Waymo has also partnered with companies such as Land Rover, Stellantis' Chrysler, Fiat, and Ram Truck, Mercedes-Benz, Renault, Hyundai Motor, and China's Geely. These partnerships were mostly announced as long-term agreements, and as a result, automakers produce vehicles for demonstration purposes, or Waymo-provided vehicles for fleets it operates. The spokesperson explained to Consumer News and Business Channel that the partnership with Toyota does not affect Waymo's plans to introduce fully self-driving ride-hailing services in the future. Waymo is currently operating commercial driverless ride-hailing services in San Francisco, Los Angeles, Phoenix, and Austin, and the number of paid rides increased from 200,000 in February to 250,000 in early April. Alphabet Chief Executive Officer Sundar Pichai said in last week's earnings announcement that Waymo's long-term business model has not yet been fully defined, and that there are still future choices to be made regarding the ownership of self-driving technology and the individual vehicles equipped with it. Waymo and Toyota aren't the sole companies developing self-driving cars for personal use. Last December, General Motors announced that it would suspend its Cruise robotaxi business and focus on developing self-driving systems for personal vehicles. Toyota has also invested in and cooperated with Elon Musk's Tesla, and Tesla is currently competing with Waymo in the field of autonomous driving technology. Toyota acquired Tesla's stake in June 2017. Tesla, once regarded as a leader in autonomous driving, is currently producing vehicles without fully autonomous capabilities, requiring drivers to keep their hands on the wheel. Tesla Chief Executive Officer Elon Musk recently criticized the high-cost burden of robotaxi production in a live conference call and promised that in June, Tesla will begin selling the fully autonomous driving service Full Self-Driving as an optional subscription-based model in Austin. Han Madi from the United States says that starting in 2025, autonomous driving and robotaxi services development is expected to accelerate. From 2025 onward, American stock investors are likely to focus more on autonomous driving and robotaxi rather than artificial intelligence. Today, as the last content of the week, we are bringing you the latest video on the United States stock market. Recently, we have been delivering the latest updates on the United States stock market. The system continues to go down. If the system is more affordable, I would like to show you this video by using it more, but since it is not working properly, I would appreciate it if you could understand. Now, the author of the original work we're going to meet today is Ed Yard. Ed Yard is one of the leading economists. He is a renowned investor with an optimistic outlook on the United States stock market. We'll also take a look at how he views the current situation regarding interest rates and inflation and hear his thoughts on the United States stock market. That's all for today's broadcast. Thank you for staying with us until the end of April's last broadcast. I'll try to greet you again with more uplifting news in May. Let's all stay quiet as United States stock investors until that day comes. Have a happy day. Thank you.
Welcome back. This week's jobs report could be pivotal in understanding what the Fed's next move might be, especially with concerns over a slowing economy intensifying lately. Let's bring in Yardeni Research President Ed Yardeni for more. Thank you. I'll get to the Fed in a second, but first, what's your view right now of this market, which has rallied back?
Well, I think the market's been choppy since the beginning of the year, mostly choppy to the downside. Now, maybe we're going to get well. In the past week or so, we've had a lot of chop to the upside. I think it's going to remain choppy. I think the trade issue is still going to hang over the market through early July, and certainly the issue regards to China and what that implies about price inflation in the United States and empty shelves in stores. So I think at this point, choppy is probably the way to describe it, but I think the market may actually be doing what it's supposed to be doing, and that is looking out beyond the next week or month. I think it's actually starting to think about 2026 and anticipating that a lot of the craziness will be behind us.
I mean, you really think any part of this market activity that we've witnessed in the move back up from the lows has to do with that? I just feel like it was oversold. We're coming back. We're not
sure what's
going on, and we can't even look, 5 yards ahead of us. I have a hard time believing we're looking 10 months.
That's a good question. I think that historically corrections tend to occur when investors worry about a recession that doesn't happen, and bear markets occur when the recession actually happens. I think we've seen a correction. I think we made the low on April 8th, the day before the postponement of Liberation Day for 90 days. I think the market at that point started to anticipate that maybe there wouldn't be a recession, might be a slowdown in the second half of the year. But to the extent that this turns out to be a correction, which is what I think it's turning out to be, then I think the market's confirming my view that we're going to get a soft patch in the second half of the year and an improvement in 2026. I think the market does look forward. It does look ahead. People consider reduced valuation multiples and wonder if now is a good time to invest given the lower prices. Does this make sense relative to my outlook for the next couple of years?
Maybe we're just looking ahead and anticipating rate cuts. Maybe that's why bond yields have finally
started going
lower
in anticipation
of that, while the stock market is just going to see what the data is, see what the earnings are. Yes, with Powell and the company.
I saw the business service in 5 regions. And Activision, I'll show you the main parts. But with other products, the price index is going up. That's why the environment is getting worse. And I think the Fed has to be very concerned about fueling inflation, so I don't think they're going to be in a rush to lower rates. This may further contribute to the market's choppiness, which has been a pattern in recent years. Scott, as you know, of anticipating rate cuts, that don't happen.
And it sounds to me like you don't think they should cut rates.
They shouldn't cut rates because they have an inflation problem. And that inflation problem is going to become increasingly visible in coming months. I mean, the personal consumption expenditures deflator inflation number that will come out on Wednesday looks like it's going to be great. It's going to be close to zero, but we should all expect that. Given some of the other pricing indicators, particularly for the regional business surveys and the National Purchasing Managers Index, which is the Purchasing Managers Index, all those prices paid and prices received indexes are showing upward momentum.